Today marks a significant milestone in the crypto world, as the United States launches its first altcoin spot ETFs. For the first time, investors can access Solana, Litecoin, and Hedera through regulated exchange-traded funds. This move signals a new era for digital assets, expanding beyond the familiar territory of Bitcoin and Ethereum. The excitement is palpable, with market participants closely watching how these new products will shape the broader crypto landscape. As we dive into the details, let's explore what this launch means for both institutional and retail investors, and why it's capturing so much attention. Their very first day, the new altcoin ETFs generated an impressive $65 million in collective trading volume. This strong debut highlights the pent-up demand for regulated crypto investment vehicles. Notably, Bitwise's Solana staking ETF, known as BSOL, accounted for a staggering $56 million of that total. Such numbers not only reflect investor enthusiasm, but also set a benchmark for future altcoin ETF launches. This early momentum could pave the way for even more innovative products in the coming months, as the market continues to evolve and mature. Among the newly launched ETFs, Solana's product has clearly taken the spotlight. The Bitwise Solana Staking ETF, or BSOL, dominated first-day trading, capturing the majority of the volume. This strong performance underscores Solana's growing reputation as a leading blockchain platform known for its speed and scalability. Investors are particularly drawn to the staking yield, which is estimated at an attractive 5 to 7%. As Solana continues to gain traction, its ETF could become a bellwether for institutional interest in alternative crypto assets. Despite the excitement around the ETF launches, the broader crypto market is showing signs of caution. Ethereum, for example, is trading around $3,978, down over 3%. Meanwhile, the Fear and Greed Index sits at 39, signaling a mood of fear among investors. This cautious sentiment reflects ongoing concerns about volatility and the potential for sudden market swings. As we'll see, these emotions play a crucial role in shaping trading strategies and risk management in the days ahead. Launch of these altcoin ETFs is more than just a headline. It's a major step forward for institutional investors. Until now, most regulated crypto products focused on Bitcoin and Ethereum. With Solana, Litecoin, and Hedera entering the mix, institutions now have more options to diversify their portfolios. This expansion could attract new capital to the crypto space, especially from traditional finance players seeking regulated exposure to digital assets. The stage is set for broader adoption and deeper market participation. One of the key attractions of the new Solana ETF is its staking yield. Offering an estimated 5 to 7%, this yield is significantly higher than what's available from many traditional assets. For institutions and sophisticated investors, staking provides an additional layer of potential returns, making these ETFs even more appealing. As staking becomes a mainstream feature in regulated products, we may see a shift in how investors approach yield generation within the crypto ecosystem. Market analysts are optimistic about the future of these altcoin ETFs. JPMorgan, for instance, projects that a Solana ETF could attract between $3 billion and $6 billion in inflows over time. Such projections highlight the growing confidence in regulated crypto products and the potential for significant capital movement. If these estimates hold true, we could witness a major transformation in how institutional money flows into the digital asset space. Recent activity from major institutions further underscores the growing interest in crypto ETFs. BlackRock, one of the world's largest asset managers, reportedly made a $99.5 million purchase of Bitcoin and Ethereum. Meanwhile, BitMine acquired $113 million worth of Ethereum. These large-scale moves signal that institutional players are not just watching from the sidelines, they're actively participating and positioning themselves for future growth in the digital asset market. Technical analysts are closely monitoring Solana's price action following the ETF launch. The key resistance zone lies between $200 and $205. If Solana can break through this level, it could trigger a rally toward $250. Traders are watching these levels carefully, as a breakout could signal renewed bullish momentum and attract even more attention to Solana's ETF. Hedera HBAR has also made headlines with a strong bullish breakout. Following the ETF launch, HBAR surged by over 14%, moving above its 30-day simple moving average. This technical move is seen as a positive sign by traders, suggesting that Hedera could be entering a new phase of upward momentum. As more investors take notice, HBAR's ETF may become a focal point for those seeking exposure to emerging blockchain technologies. Ethereum is sending mixed signals to traders and analysts alike. While the price hovers between $3,950 and $4,000, there's uncertainty about its next move. Some community analysts point to this range as a key support zone, while others warn of potential downside risk. These conflicting views highlight the complexity of the current market environment and the need for careful analysis before making trading decisions. Traders should be prepared for heightened volatility in the days following the ETF launches. The initial 24 to 72 hours are often marked by sharp price swings as the market digests new information and adjusts to increased trading activity. This period can present both opportunities and risks, making it essential for traders to stay alert and manage their positions carefully. Crypto market remains vulnerable to leverage-driven volatility. In a recent 4-hour window, over $100 million in positions were liquidated, underscoring the risks associated with high leverage. Such rapid liquidations can amplify price movements, leading to sudden and sometimes severe market corrections. Traders and investors need to be mindful of these dynamics, especially during periods of heightened activity. Potential sell-side pressure is another factor to watch, particularly with speculation swirling around Grayscale's Solana holdings. If large holders decide to offload their positions, it could trigger a wave of selling and put downward pressure on prices. This risk is especially relevant in the early days of ETF trading, when market sentiment can shift rapidly in response to new developments. Beyond crypto-specific risks, macroeconomic factors are also in play. The upcoming Federal Reserve interest rate decision looms large, with the potential to impact market sentiment across all asset classes. Higher rates could dampen risk appetite, while a dovish stance might provide a boost. As always, crypto markets remain sensitive to broader economic trends, making it important to keep an eye on the bigger picture. Those new to the concept, an ETF or exchange-traded fund is a type of investment fund that's traded on stock exchanges, much like individual stocks. ETFs can hold a variety of assets, including stocks, bonds, or in this case, cryptocurrencies. The launch of Altcoin ETFs allows investors to gain exposure to digital assets without directly holding the underlying coins, offering both convenience and regulatory oversight. It's important to distinguish between spot ETFs and futures ETFs. Spot ETFs track the actual price of the underlying asset, in this case, altcoins like Solana, Litecoin, and Hedera. Futures ETFs, on the other hand, are based on contracts that speculate on future prices. Spot ETFs are generally seen as more transparent and closely aligned with real-time market movements, making them attractive to a wide range of investors. Solana's rapid transaction speeds and low fees have made it a favorite among both developers and investors. Its blockchain is designed for scalability, supporting thousands of transactions per second. This technological edge, combined with the attractive staking yield offered by the new ETF, explains why Solana is leading the pack in terms of investor interest and trading volume. Litecoin, often referred to as the silver to Bitcoin's gold, brings its own strengths to the table. Known for its stability and long-standing reputation, Litecoin offers a reliable alternative for investors seeking exposure to established cryptocurrencies. Its inclusion in the new ETF lineup provides additional diversification and appeals to those who value security and track record. Hedera stands out for its unique consensus mechanism and enterprise partnerships. Unlike traditional blockchains, Hedera uses a hashgraph structure, which offers high throughput and security. Its growing list of corporate collaborators adds credibility and potential for real-world adoption. The new ETF gives investors a way to participate in Hedera's growth story without the complexities of direct ownership. Arrival of Altcoin ETFs is part of a broader trend of institutional adoption in the crypto space. As more regulated products become available, traditional finance players are increasingly comfortable allocating capital to digital assets. This shift not only boosts liquidity but also brings greater legitimacy to the market, encouraging further innovation and investment. Regulation plays a crucial role in the success of crypto ETFs. The approval of these new products reflects growing acceptance by regulators who are working to balance innovation with investor protection. As the regulatory framework evolves, we can expect more clarity and potentially even broader access to digital asset investment vehicles. The launch of Altcoin ETFs has the potential to influence prices across the crypto market. Increased demand from institutional investors can drive prices higher, while the added liquidity may help stabilize markets during periods of volatility. However, as we've seen, risks remain and price movements can be unpredictable in the short term. The United States is not alone in embracing crypto ETFs. Other countries, including Canada and several European nations, have already launched similar products. This global trend reflects the growing mainstream acceptance of digital assets and the desire for regulated investment options. As more markets open up, competition and innovation are likely to accelerate. While institutional investors are a major focus, retail investors also stand to benefit from the new Altcoin ETFs. These products offer a convenient and regulated way to gain exposure to leading cryptocurrencies, without the need for complex wallets or direct coin management. For many, ETFs represent a safer and more accessible entry point into the world of digital assets. Despite their advantages, Altcoin ETFs come with their own set of risks. Price volatility, regulatory changes, and liquidity concerns can all impact performance. Investors should carefully assess their risk tolerance and conduct thorough research before investing. As with any financial product, understanding the risks is key to making informed decisions. Investors should also be aware of the fees associated with Altcoin ETFs. Management fees, trading costs, and potential tracking errors can all affect returns. Comparing fee structures and understanding how they impact overall performance is an important step in evaluating any ETF investment. Staking is a process where investors lock up their crypto assets to support network operations, earning rewards in return. In the context of the Solana ETF, staking allows investors to benefit from additional yield, making the product more attractive. As staking becomes more common in regulated products, it could reshape how investors approach yield generation in the crypto space. Liquidity is a key consideration for any ETF. High trading volumes like those seen on the first day of the Altcoin ETFs help ensure that investors can buy and sell shares easily. However, liquidity can fluctuate, especially during periods of market stress. Monitoring trading activity and understanding liquidity risks is essential for both new and experienced investors. Investor psychology plays a major role in crypto markets. Fear and greed can drive rapid price swings, as seen in the recent Fear and Greed Index reading of 39. Understanding these emotional drivers can help investors make more rational decisions and avoid common pitfalls during periods of heightened volatility. One of the main advantages of ETFs is diversification. By holding a basket of assets, investors can spread risk and reduce the impact of any single asset's performance. The new Altcoin ETFs offer exposure to multiple cryptocurrencies, making it easier for investors to build balanced portfolios. The rapid growth of crypto ETFs is reshaping the investment landscape. As more products come to market, competition is increasing, leading to innovation in both structure and strategy. This trend is likely to continue as investor demand for regulated crypto exposure grows. Successful trading in the wake of new ETF launches requires a clear strategy. Traders should consider factors like volatility, liquidity, and technical levels when making decisions. Setting stop losses and managing position sizes can help mitigate risk during periods of uncertainty. Technical analysis remains a popular tool for crypto traders. Indicators like moving averages, resistance levels, and volume trends can provide valuable insights into market direction. As seen with Solana and Hedera, technical signals often precede major price moves, making them essential for active traders. Volatility is a double-edged sword in crypto markets. While it creates opportunities for profit, it also increases risk. Managing volatility requires discipline, patience, and a willingness to adapt strategies as market conditions change. Staying informed and flexible is key to navigating these dynamic markets. Market corrections are a normal part of any investment cycle. In crypto, corrections can be swift and severe, especially when leverage is high. Understanding the causes and recognizing the signs of a correction can help investors protect their capital and avoid panic selling. Broader economic trends, such as interest rates and inflation, have a direct impact on crypto markets. The Federal Reserve's upcoming decision is just one example of how macro factors can influence sentiment and price action. Staying attuned to these developments is crucial for anyone investing in digital assets. Looking ahead, the future of crypto ETFs appears bright. As more products are approved and investor interest grows, we can expect continued innovation and expansion. The success of the first Altcoin ETFs could pave the way for even more diverse offerings, including products focused on emerging blockchain sectors. The race to launch new crypto ETFs is heating up worldwide. As countries compete to attract investment and foster innovation, regulatory approaches may diverge, creating both opportunities and challenges for investors. Keeping an eye on global developments can help investors identify new trends and potential markets. Education is key to successful investing in crypto ETFs. Understanding how these products work, the risks involved, and the factors that drive performance can help investors make better decisions. As the market evolves, ongoing education will remain essential for both new and experienced participants. The crypto community has responded with a mix of excitement and caution to the new ETF launches. While many celebrate the increased access and legitimacy, others warn of potential risks and market manipulation. This diversity of opinion reflects the dynamic and rapidly evolving nature of the crypto space. Media outlets around the world have covered the Altcoin ETF launches extensively. Headlines highlight the record trading volumes, institutional participation, and potential for future growth. This increased visibility helps raise awareness and attract new participants to the crypto market. As the dust settles from the initial ETF launches, all eyes are on how the market will evolve. Will institutional inflows continue? How will prices respond to new developments? The answers to these questions will shape the next chapter in the ongoing story of crypto adoption and innovation. In summary, the launch of the first Altcoin spot ETFs in the United States marks a turning point for the crypto industry. With strong first-day volumes, growing institutional interest, and new opportunities for both retail and professional investors, the stage is set for further growth. However, risks remain, and careful analysis is essential for navigating this exciting but volatile market. Successful debut of Solana, Litecoin, and Hedera ETFs is a testament to the growing maturity of the crypto market. As investors and institutions alike embrace these new products, the landscape of digital asset investing continues to evolve. Staying informed, understanding the risks, and adapting to change will be key for anyone looking to participate in this next phase of crypto innovation.